How to gain an edge trading earnings. My name is Don Kaufman. This is a TheoTrade presentation. First and foremost, risk disclosure. We're not financial advisors nor a broker-dealer. Although I spent 15 years in the brokerage business, I am no longer in the brokerage business. Next, copyright disclaimer. This is ours. This is not yours. But if you ever need to get a hold of us, okay, we're located right here in Scottsdale, Arizona. And I encourage you guys to email us. It's probably one of the best ways to get a hold of us after this evening. People constantly ask us that, well, how do I get a hold of Don? We actually use a generalized inbox right there, okay? See it? It's support at TheoTrade.com. What that effectively means is, well, you can actually email me there. There's no problem whatsoever. And, this shocks people. We answer emails. I answer emails. All of our traders answer emails. So that's enough said on that front. By the way, if you want to call us, it's fine. 800-256-8876. All right, onward and upward. Next, this is why you are here. I mean, tonight, this is why you're here. By the end of this webcast, I really want you to be able to walk away with the following knowledge. And I'm really going to hammer some points tonight. First of all, we're going to discover expected move. Now, okay, this is my own question, by the way. Some of you are watching this for the very first time. Who here is brand new, has never heard a TheoTrade presentation before? Anybody? Come on. Okay, these are not rhetorical questions. Jump in here anytime. I mean, who here has never heard a TheoTrade presentation? You're brand new and you have absolutely unequivocally no idea what you're in store for. Because there is something I talk about almost incessantly. A huge amount. And I want to make sure that we're all kind of on the same page with this. We're going to talk extensively about what is termed, expected move. And it's why I say kind of you're here obviously to learn that. Now, if you think, by the way, nobody wants to chat in, come on. Who here is brand new, right? There's not that many people. A lot of you guys that have heard some of this. Okay. We're going to make you intimately familiar with expected move, specifically around earnings. We're going to learn, how efficiency in the markets can really benefit you. All right. You're a retail trader. I'm a retail trader. Okay. I've been a market maker. I've been a retail trader. I've worked in the brokerage business, but I'm a retail trader. And we're actually going to show you an advantageous resource in all aspects of investments, retirement accounts, cash accounts, futures trading, and more. You've got to understand, what this expected move is. Number 3 over here, we're going to learn what Weekly's strategy, that's Weekly's strategy, can take very minimal risk and produce really astonishing returns. I'm actually going to show you a bunch of my trades tonight surrounding predictable or what we term manipulated movements. Manipulate, it's a big word, right? Number 4, discover a unique method you can use surrounding earnings announcements. So tonight I'm going to kind of cover a little bit about earnings announcements, and we're going to detail that. By the way, I urge you to tune in to tonight's entire presentation. Something that we're going to make available to you, this evening is an indicator. And I want everybody to be aware of that. It's our gift to you for joining us and staying tuned with us throughout the course of this entire webcast. So stay with me to the end of the webcast. And we're going to give you an earnings expected move indicator. And what it does is it provides expectations of stock price movement surrounding earnings announcements. I am going to show it to you throughout the course of this evening, but we're going to give it to you again at the end of tonight's webcast. I will actually give you a specific link. You will follow me to the link and you can go ahead and download this particular indicator. So it's $197 value associated with it. It's a great indicator. If you want to see it, well, here it is. This is actually a quick picture of it. What you're looking at right now is none other than Netflix. This is just a screenshot, of my charts. It's a earnings expected move indicator. What it effectively does is it's actually painting the chart, and I'm kind of highlighting right here, higher and lower. It's painting the chart, how far Netflix is expected to move on the next earnings announcement. The next earnings announcement is just around the corner. So it actually uses option markets to determine, stock price movement before an earnings announcement, not after, before. So kind of cool. Do we like it? Because I'll tell you what, this, by the way, this one this one that you're looking at right now is specific towards Thinkorswim. This one is specific towards Thinkorswim because I know inevitably that question will come up. But I will, by the way, I can also talk about there's other brokerage firms. I get it. And we can translate for other brokerage firms. So have no fear. All right. Next, housekeeping. Some housekeeping. One of the things you got to understand that tonight, this is a skill set. Okay. And I'm adamant that you pay attention during the following course material. If you really want to learn this stuff, seriously, shut the door. Turn off your Skype. I mean, sadly, mine's on, but I have mine on do not disturb right now. Doesn't matter. People always Skype me. Turn off your chat, whatever else is distracting you. I don't take texts. I literally put my phone like on silent mode. Close down your Facebook. Okay. And I gotta reiterate that, like literally close down Facebook. Because that's it's not gonna help you whatsoever, especially in your quest for learning about trading. And I can go on and on and on. Phones on silent mode. Kick the kids out, grandkids out. Dog can stay. I like the dog. All right. Listen, you took the time to be here. It's important. This is important. Focus on being here. All right. I took a tremendous amount of time to put this particular presentation together tonight, and I think it's going to help a lot of people in a lot of different ways. And I want you to know that tonight's presentation, you're going to get a huge amount out of it. All right. I watched order flow for 15 years, and it's the reason that I'm here. It's the biggest reason that I'm here. Okay. What does that really mean? I watched order flow, and I want to give you a little background on me. So first and foremost, okay, I have been around trading my entire life. I had family that started trading in the early 1970s in Chicago. My uncle actually founded a really prestigious, very famous trading firm. That trading firm was actually called O'Connor and Associates. Not often I tell that story, but I did have family. They owned over 500 seats on exchanges around the world. So I kind of grew up around it. And in the late 90s, 3 weeks out of college, I got involved in it. Specifically, it was 1998. It was right during the fall of long-term capital management in 98, right? I'm not, I'm not too seasoned, but I've got over 20 years now in the business. So after a few years of trading in Chicago, I went to work with Thinkorswim. It was a startup firm. Specifically 2001 is when I worked with Thinkorswim. Thinkorswim, we took the company public in 2007, and I remained there. And by the way, I built the education division of Thinkorswim. I went on to run education for TD Ameritrade. So that's a little bit about my background. People always ask me what's watching order flow. Listen, I had access to everything you did, okay? If you're going to run an education division of the largest option order flow in the entire retail world, what do you think the best thing is to do to learn about retail traders? Study them, okay? We know everything. Everything. When I say we, okay, there's a bunch of people here specifically at TheoTrade that worked for TD Ameritrade. Okay, several of our staff members or instructors here at TheoTrade worked at TD Ameritrade. We studied the trades. I mean, I've literally looked at and studied hundreds of thousands of accounts. Okay, by the way, you don't pull up and look at every single account. You're studying the accounts as a whole. What you learn here comes from watching billions of dollars in others' mistakes. Okay, and the knowledge of what works best for retail traders. Okay, that's a big portion of what we actually do. Now, over the years, I've done a couple of CNBC tours. This is actually one that I do almost every week now. It's TD Ameritrade TV. So I'll hop on TD Ameritrade TV. This is one of the ones where I was actually in Chicago a couple of weeks ago. So it's a more recent picture. Here's one that's probably one of the most memorable from CNBC because they pitted me against the shark himself. It was exciting. It was, by the way, I was the short and he was the long. And out of this, I won. By the way, I got to tell you something about him. Kevin O'Leary could not be a nicer guy. I know it ruins it for everybody. All right. You guys ready to get into this? Because it's going to be good. Price movement defined. So listen, now we're going to jump right into trading, trade skills. Okay. I got to give you some highly detailed and background knowledge to build you up to understand where we're actually headed with this trade. So we're going to start with price movement defined. Okay. As stocks move, traders, investors alike, Well, they can measure those movements, okay, kind of what I term after the fact, all right, with what is termed historical volatility. Now, historical volatility is the annualized standard deviation of the past stock price movement. Basically, what's historical volatility? You guys tell me. Like, listen, these are not rhetorical questions. Jump in. There's a reason there's a Q&A box. Like, I like to get people a little bit involved because otherwise I'm just, I don't want to talk at you for the next, 70, 80 minutes here. Basically and effectively, historical volatility just tells you, okay, kind of the rate at which a product is actually moving, right? It's based on previous days or weeks of data, right? That's what it is. That's what it is. If you take a look, this is Costco. And I wanted to bring this up because Costco, all right, this I took the screenshot right before the earnings in Costco. And I took the screenshot a couple of days ago knowing there's not a lot of earnings this time, right? This is just the time right now. We're right before earnings. And that's actually why I'm hosting this, is right before earnings, right? But I took a screenshot of Costco. And the reason I took a screenshot, because what I'm getting to is Costco, just prior to the earnings announcement, okay, its historical volatility actually subsides. It subsides. So what I'm saying is people look at like what's called like average true range, okay, average true range, ATR, where they look at like historical volatility, and most of that kind of subsides, meaning it kind of mellows out right before the earnings announcement. Why? Okay, because the stock doesn't really move that much typically before earnings because everybody's like, I don't know what's going to happen. But it leaves you as a trader or an investor, it leaves you blind as to the imminent risks of the earnings announcement. And it's where I want to start tonight, just to gather a little understanding of that. Okay, earnings are coming, but there's lower price movement. Like, again, don't let that word historical volatility really freak you out. Just, breathe, people, breathe. Historical volatility is just actual price movement. By the way, it's, people define volatility different ways. Okay, when people go, oh, that marketplace, that marketplace is volatile. By the way, I don't mind. We're gonna pull up some live trades tonight. This is actually the Thinkorswim platform. Relax. You guys tell me what stocks. Like when you think of a really volatile stock, what's a volatile stock right now? Okay. Let's go to Beyond Meat. Beyond Meat. It's beyond volatile. All right, I can come down to study, add study, cruise down over to volatility studies, historical volatility. Look at this. Historical volatility, okay? It's actually not that high right now. It is not that high. It was high back here. It's not that high right now, okay? What else you got? I'm serious. When I ask these questions, these are not rhetorical questions. What else you got? Like, what's volatile? Everybody's like, oh, Tesla's volatile. Well, really not so much, okay? By the way, 4 people just typed in Tesla. It's not that volatile. It isn't, okay? What else you got? Huh? What else you got there, huh? Anybody? Okay, pull up Costco. Okay, look at this, Boeing. We could have a party. So all this is doing, though, is measuring backwards. It's the risk backwards. That doesn't really help that much, does it? Okay, you're seeing like actual price movement backwards. Well, let's give you a market of Foresight. When you think of Foresight, like what are you trying to do? Whenever I think of the word Foresight, I'm trying to get, clarity to the future. And by the way, this is like the best image that I could think of for Foresight because you're really trying to gain some clarity to a degree to the future. Like looking back, it's great. It's great. Provides a lot of insight, but it's not the insight that I'm looking for. If we could only produce Foresight in the markets, well, enter the option markets. Okay. Oh, now that's the first time tonight I said the O word. He said the O word. I said option. I said it. Okay. How many people here have a little bit of options experience? Okay. Because if you do, great. By the way, I got another question. Can anybody type in here, say, I have no options experience? That's okay too. Like, I don't want you to think that tonight that you have to be an options super geek. Okay. There are some people that are also very adamant. They say, I will never trade an option. And I'm okay with that. By the way, speaking of which, you're like, I will never trade an option. Come on, it's all free now, right? You can trade stock for free, a couple of options for next to nothing. Commissions. People are constantly, this last week and this week, are talking about the commission war. There is no war. It's over. You won. You already won. And actually, the strategy that I'm talking about tonight just works so much better because commissions have basically been decimated. It's great. Listen, if you have options experience, if you don't have options, push it all aside for a second, okay? Most people, they view options. They view options market. It's the ability to quote unquote take a shot. They're like, oh, I'm going to be bullish. I'm going to be bearish, okay? And they don't have to trade the stock. But there's so much more going on, and it's just missed, right? We view options as kind of putting a price tag on risk. And putting a price tag on risk, see, options are all about a week from now, 2 weeks from now, a month from now, 6 months from now. What options really do is they put a price tag on the risk, okay? And that can be used to price out future moves with a given stock. Now, I'm going to explain all of this, okay? Options, well, they are your future. Options are your future. You're like, I don't want them to be. Well, they are. Okay? I want you to ask yourself now, don't think too hard about this, but why is an option trading for $3? Like who decides? Ooh, there's like an option god out there. They're like, that one's trading for $3. Okay? Who really decides like that an option's trading for $3? Okay, and these are not, again, rhetorical questions, and I'm not trying to, ask anything that's too difficult in here. I just want to know, like, who really decides that an option is trading for $3? Because I want you to get you thinking on the right, okay, path over here. Because if you understand, okay, how and why things are being priced, you're going to be a lot better off. So, okay, in every single marketplace, there is a buyer, okay, and a seller. And it's this marketplace, okay, the buyer and seller, that determines it. In the end, why is an option trading for $3? In the end, it's a buyer and a seller. There's really the term I'm looking for. People are like, it's implied volatility. Other people are like, it's the Black-Scholes model. It's Cox-Rubenstein model. It's this, it's that. Okay? Ease up, engineers. Ease up. In the end, options trading for $3, it's simply supply and demand. It is supply and demand. That's what, okay, volatility, vol in options is really about, supply and demand. If everybody demands options in this stock, guess what? The option price ain't going to be trading for $3. It'll be trading for $4. And if everybody keeps demanding it, it'll be a $5 option or a $6 option. Okay? Now, if there's not a lot of demand and the stock is just like sputtering, then you know what? That option's not going to be trading for $3. It's going to be trading for $2. It's all about what somebody's willing to pay for. Like, sure, in options, time has something to do with it. And, you could talk about intrinsic and extrinsic, but in the end, an option is trading for $3 because it's what somebody's willing to pay for something. And you have to realize, okay, with every option that's traded, and please, bear with me for a second because this is important for every option that's trading. Okay, every time I do this, there is one buyer, okay, and there is one seller. This option market, whether you like it or not, if an option trades at $3, one person bought it and one person sold it. I don't care if you're people hop all the time on CNBC and they go, oh, somebody, and this is my favorite thing, they go, somebody somewhere bought 1,000 calls. They bought 1,000 calls in what? In Apple. Okay, it's the $5 million bet. What's a $5 million bet? So what? They bought 1,000 call options in Apple. What do you care? Because somebody also sold them 1,000 call options in Apple. Like, do you sit there and think the person that sold them, like, listen, they come to an agreed upon price. Nobody knows nothing. Pretty fair marketplace. Now, what we're going to learn is that embedded in options pricing is the implied future move of a stock. Okay, an option is really trading for $3 because it's telling you what that risk is going to be. Now, let me show you a little bit more because this is where sometimes a little hamster gets stuck in the wheel. Okay, if we know what to look for in the options marketplace, we can determine how far a stock or index product, what's an index product? Something like the S&P 500. So if we know what to look for in the options marketplace, we can determine how far a stock or index product can move within a given period of time. So if you tell me, okay, what's Apple likely to do a week from now, I'll tell you absolutely and definitively this is what its probability is, okay, to do X. I can tell you how far that stock is supposed to move within a given period of time. How many people can honestly say, and I'm serious now, that you're currently using this? Okay? because I always ask the question, why are you not using this? But how many people can honestly say, okay, that are on right now? And by the way, we have just shy of 1,000 people in here right now. How many of you are actually using this? By the way, so we're all clear. I haven't seen one person come in here. I literally haven't seen one person come in here yet and say, I am using this. It's the little question and answer box over there. It's okay. It's okay. So nobody's using it. Listen, when it comes to this, you need to get in the know of what is expected. All right. All right. By the way, I had 2 people come in there. All right. This has nothing to do with seasonality. No way, shape, or form. That's good. We're getting somewhere. Okay. We've had a couple people said, I use it after learning from you. I've used it after learning from you. I've had a couple people come in here, and I appreciate that. So Annie came in here and said that. Vonnie came in here and just said that. Okay. Expected move. Tori came in here and said that. Gregory came in here. So they're all saying, like, I've dabbled in it a little bit. I can't stress to you enough. Like, you need to get in the know of what's expected. And I'm going to show you exactly why. First of all, get in the know. Maybe you don't know where the markets are going. And I'm not going to tell you right now that you're going to figure out where the markets are going, but you can measure how far the markets can move in a given period of time. And this normal fluctuation is what we term expected move. Okay. So we're going to use this term a lot now tonight. We're going to use this expected move, expected move, expected move, expected move. You're going to hear that all night. Listen, what's the expected move? Okay. I just want you to think of it. It's determining how far this thing can move, okay, within a given period of time. Now, even if you know, I like this now. People are coming in there and they're saying, I use it, okay? Expected move has been around since options have been around. But still, this is something that never really permeated very well into the retail trading community. And I'm going to show you ways to use it, okay? Forget about just knowing it. First I got to teach it, then I'm going to show you ways to actually use it. So you're going to hear a lot about expected moves. And if you know about expected moves, I'm going to show you how to trade around those expected moves. Okay. What to expect with expected moves? Expected move, again, it doesn't tell you which way the markets are going to go. I know everybody's doing that, like, which way is it going to go? Do you realize right now, okay, people, we are one tweet away from being up or down an absolutely insane amount. I can't stand right now because people constantly are like, with this MACD, the Fibonacci, and the Bollinger Band, I can determine. What can you determine? Can you determine what the Chinese delegation is going to do? Because they just fired back a couple of tweets earlier today. By the way, I love like how things happen now over Twitter. Do you think the developers, when they were building Twitter, realized like, hey, one day the Chinese delegation is going to sock it right to the administration, here in the U.S. over Twitter. Okay. And then a few minutes later, Jerome Powell is going to speak and he's going to confuse everybody. I'm sick of people telling me they know where the market's going to go. Okay. I've worked at one of the biggest trading firms in the world. They didn't know nothing, but they used expected moves. And I just reiterate that. Okay. It's all about expected moves. Now, I'm going to explain a little bit about those expected moves. So expected moves explained. Okay. This is where we're going to talk briefly about options. We're not going to get too crazy. So here we have a stock. Okay. Now I'm going to use my famous stock. Okay. My most famous stock is a stock. Oh, wow. My pen is out of control. That is awesome. Sorry. I get a little too caffeinated and the pen just gets a little crazy. Okay. My most famous stock is a stock called stock. All right. We're going to say this stock is trading right smack at $100. So if that stock's trading at $100 and that stock has what we term a 20% IV. So here's the stock and the stock is trading right at 100. Do you really know what 20% means? Do you? Okay. What a 20% implied volatility denotes, it means how far the stock can move up or down within a given period of time. Now, if you used 1 year of time, that means the stock could go up to 120 or down to about 80. Like a 20% volatility on a $100 stock, 20% volatility, $100 stock, 20% volatility, $100 stock. Okay. It says it's supposed to move up or down again about, and I'm just blanking it out to make this really clean, really easy for everybody to be able to ascertain because this is important now. All right. Getting this knowledge down is going to be really, really important. So I'm going to reiterate this. Right here is this $100 stock. And this $100 stock has this 20% vol. So the stock can move up to 120 or down to 80. Now, that range right there, that range is called, okay, the expected EM, expected move. Expected move. That's the expected move. Now, that expected move denotes 68% of all occurrences. Basically, what I'm saying is 70% of the time we're supposed to stay from X to Y, right? We're supposed to stay from 80 to 120. Now, that's a fairly big move, and that's 68% of the time. Now, how do they actually derive the move itself, right? Well, I'm going to show you that. The way that this kind of works, if you have, and I'm going to give you another stock completely, if you have a $100 stock, okay, and you looked at what we call a call option, we're going to look at a 100 call, and we're going to look at a 100 put. Now, the stock is trading right smack at 100. The 100 call, okay, is trading for $3. The 100 put is also trading for $3. Now, I know a lot of people, okay, and a lot of people don't know what a call from a put is. 100 call gives the right to buy the stock at 100. Okay, but I don't want to worry about that right now. So what? You have the right to buy the stock at 100. You know what that $3 is? That $3 is defining supply and demand. Then the 100 put gives the right to sell the stock at what? 100. You know what it's trading for? $3. Now, I'm trying to make this example easy, but bear with me for a second. If the call cost $3 and the put cost $3 and you bought them both, what would you be doing? Okay, well, $3, okay, $3 equals what? You'd be paying $6 for the trade. You would be paying $6 for this trade. What are you buying for your $6? Okay, what are you really buying for $6? You're buying what is termed the expected move. You're buying actually the expected move. Did you know that that $3 and this $3 added together is defining how far the stock can move within a given period of time? Okay, it's unequivocal. That is the way that expected move was originally designed. They said, you know what? If the 100 put is trading for $3 and the 100 call is trading for $3, if you add those up, that means that a trader, okay, is looking for a $6 move. Now, you have one trader that is going to buy the expected move. Then you have another trader that is selling the expected move. For remember, for every buyer in this business, there's a what? There's a seller. For every buyer, there's a seller. For every seller, there's a buyer. So one person buys the $6 expected move. The other person sells the $6 expected move. Now, time out, blank the screen. Now, okay, we go out there and we have this $100 product. And if you buy the call and buy the put, what do you need? Okay, you need us up to 106 or down, for instance, to 94. You've now defined the expected move. Okay, and you're like, wait, what? Okay, the options market is literally telling you how far the stock is supposed to move up or supposed to move down. And very few people ever really ascertain this. Now, okay, bear with me because we're going to go deeper than you've ever wanted to go before. Let me stop right there, breathe for a second. Are you okay? Because I like to stop over there. Okay, and by the way, okay, there's absolutely, and I'm going to say this again, there's no directional bias to that. There's none. There's no directional bias to expected moves. Stop thinking that it's going to provide you, we're going up or we're going down. It doesn't work that way. Okay? The options market is very, very pure, and I'm going to show you that. It's pure in the sense that it doesn't know direction. It just knows movement. Now, expected move. Expected move defines what we term a one standard deviation, 68% of all occurrences. So, when I was going through that, okay, the one part that I didn't get into too deeply, but I think is important, that you know that if you have that stock right at 100, okay, and you're like, well, all the way up to 106 and then down to what? 94, it's supposed to stay in that range 68% of the time. Immediately you should think, well, what happens to me out here or down here? Well, you're wrong, okay? But there is something going on in the marketplace that we are going to absolutely prey on. And I'm going to teach you that. I got to teach you the basics of expected move before we can actually learn to prey on an edge. And it's literally doing just that. So expected move is a probability of expiring inside a given range by a specified date. Okay? Good. Everybody? Yeah? A lot of people in here. It's kind of quiet. Eh? All right. expected move. Now, not every trading application has expected move. Did you know you could use what's termed an at-the-money straddle as an alternative to the expected move? Okay, I'm going to just show you what it is. It's add the at-the-money call to the at-the-money put for any selected expiration cycle. Yada, yada, yada. That doesn't really make sense. That's fine. Here, let me actually show you in context. Okay, in context of none other than Netflix. Why am I picking on Netflix tonight? Because Netflix is one of the first wild child stocks to have earnings. Every earnings series, so there's Netflix, and you can see Netflix. I took the screenshot the other day. This is not necessarily the price Netflix right now, but okay, this trading application that I'm on, this happens to be TOS. It's Thinkorswim. It's TD Ameritrade. And the reason that I show TD Ameritrade and Thinkorswim is because this is the platform that I didn't just grow up on. There's a lot of features in here, including expected move, that I worked on the calculations for it. So I'm kind of the guy that's intimately comfortable to tell you everything there ever was to know about expected move, right? There was somebody that's like, what's your name? It's Don Kaufman. I was here when we built this. Okay. I built, a bunch of tools inside of Thinkorswim. Anyway, with that, here is an October expiration, okay? The October 18th, and there's 11 days to go. The expected move on Thinkorswim is actually found right there. It says it's expected to move $30. Okay, $30. Well, it's about $31. Should we just round it to $31? Now, if you didn't have, let's say you didn't have that calculation, and you're trading on Interactive Brokers, or you're trading on this platform or that platform, guess what? The at-the-money straddles can be used in place of expected move. Let's just add the calls, okay? Add the puts. Here's the calls, here's the puts. Add them up. What does it come to? Oh, about $30. Let's not split hairs. Okay, it's $30. Now, that expected move, it doesn't tell you. It doesn't necessarily tell you whether we're going up or down. It says plus or minus. Look at it, plus or minus. Be aware of that. But I wanted you to see the call plus the put. It's so close to being the expected move. So don't fret. Okay. Now, if I ask that question, like, listen, we're almost trading right at 275. You have a call trading for what? $15. You got the put trading for $15. What does it really mean? It means in the next 11 days, we're supposed to move about $30. $30 where? Higher or $30 lower? Stop. Does that help you? It should. It really, really should, because I'm going to tell you now, these expected moves, why they're so effective. All right. Expected move examples. So let us evaluate, okay? Let us evaluate several short duration, weekly, okay, expected moves, and make sure that you now know what it is we're looking for, okay? This is an example. This is only an example, okay? You give me the stocks. You tell me. We're going live right now. We're going live, okay, to a trading application. Let's just do this. So, by the way, expected move is calculated in real time. People always ask me that question. We're going live to a trading application. I want to make sure that you guys understand what expected move really means. Here's ExxonMobil. I don't know why ExxonMobil's up there. It doesn't matter. The expected move, okay? In the next few days, this thing is expected to move up or down $2. Okay? All right. So it's expected to move up or down $2. $2. Okay? Up or down $2. Give me another one. Okay? Oh, I like it. Somebody said Roku. Ooh, Roku. Roku, it's a little bit of a wild child. Look at this thing, 74% volatility. Now, my guess is that Roku also has earnings coming out very soon. Okay? There's also other news coming out in Roku. So inside of Roku, yeah, you're looking in just the next 10 days. In the next 10 days, it's expected to move $10. But forget about that. Did you know that in the next 3 days, it's supposed to move $6.30. Now, maybe you're not on Thinkorswim. Remember, what can you do? Look at Roku for a second. It's trading right smack at 108. All you got to do is add the put, okay, to the what? To the call. Look at this. Look. Right there. That's $6. What's this? $6. They're basically the same. So don't freak out if you don't have this trading application. Okay? Somebody said, what about Apple? Okay? All right. Let's look at Apple. And then we're going to talk about how to use this. In the next 3 days, Apple's been volatile lately. In the next 3 days, it's expected to move $5.66. That can help you with everything from stop orders to gauging risk to I can go on all day. But that's not what we're going to use it for, not tonight. Okay. I just want to make sure that you know what you're looking for. Okay. And you know that, you know what? Hey, listen, I just said the next 3 days, but forget the next 3 days. Okay. Maybe Apple has earnings coming out here. 24 days from now, there's earnings coming out. That's a $16 move. Okay. But forget about Apple. Maybe you look at Tesla. You want to know how much trouble you're going to be in? How much trouble am I going to be in? Okay. Tesla's coming out with earnings somewhere between now and October 25th. That's a $24 expected move. Yeehaw! It's almost 10% of the stock price. It's huge. Huge. Close that down for a second. Now, why expected move matters. Listen, expected move is not based on some line drawn on a chart. Okay? This is not like some Fibonacci or a figment of a trader's imagination. I'm not using a MACD, a Fibonacci. Maybe it's an Elliott wave. It's nothing of the above. What is expected move then? That's based on billions of dollars at risk. And basically, expected move, there's billions of dollars at risk within a live market, and it can produce astonishing results. I'm going to show you exactly what expected move can do. I have a question for you guys. How many of you have ever tuned in, okay, to one of the evening videos that we do here at TheoTrade or one of the weekend videos that we do here at TheoTrade? Just a yes or a no. Just chat into the chat right now, yes or no, okay? How many of you ever tuned in to one of the nightly videos that we do or one of the weekend updates? Because if you have, okay, I talk about expected move, again, incessantly. And I want to reiterate this. If you haven't, it's okay. Now you're like, there's nightly videos, okay? Here's an example from today. This is today's trading session, okay? Whereby the markets, they adhered directly to the expected move, and then they stopped dead in their tracks. Ready? Okay. This is the SPX. This is what I use every single weekend. Now, the lines drawn on your screen, okay? It's funny because I talk about lines drawn on a screen, but what I do is I take the options market and I draw the options market onto the chart, okay? Here's what the 3 lines, what they represent, okay? The 3 lines represent the starting point of the week. This central line, okay, is where last Friday the market kind of left off. So here, this was last Friday, right? And I want to get kind of a bullseye on it. Right there was the end of last week. So this central line is just last week, okay? The upper line is the upper edge of the expected move. The lower line is the lower edge of the expected move. And I'll just give you a quick example. This week, the expected move was right around plus or minus $53. That was a terrible 5-3. Okay, I'll do better. I can do better. It was plus or minus $53. So that's a $53 move higher or a $53 move lower. Okay, now I want you to know something about the expected move. They're not just lines drawn on a screen. The expected move, okay, is based on an options market. That options market, how many billions of dollars do you think are traded in the SPX options market? That's not a question like I want an answer, people. How much money do you think is traded in an SPX options market? Okay, I don't know, let's go to it. We can go right to the SPX. Okay, and here's an option that's for Friday's expiration. I'll open up every single option in this chain. Okay, I want you to see, look at the open interest. There's tens of thousands. There's hundreds of thousands of contracts in here. Hundreds of thousands of contracts, okay, are open in a $3,000 product. There are billions of dollars being traded in this SPX. Billions of dollars are being traded in that SPX, okay? All to do this. This is an intraday chart. This is today. We hit the lower edge of the weekly expected move and we stopped dead on it because there's billions of dollars fighting back and forth on the edges of these expected moves. And it is huge. And it is an edge-filled love fest right now. And people have no clue, okay, how to take advantage of it. And it drives us absolutely nuts because we just talk incessantly. Every single week, we're like, you should be a buyer or a seller of premium. What should you do around the edge of the expected move? We have strategy after strategy after strategy on how, okay, to go after this edge. And that's the thing. I mean, what I'm just showing you there, does this expected move knowledge help provide a tradable edge? Okay, absolutely unequivocally sure. Okay, if you have a pretty good probability the marketplace is going to stop dead at that level, or okay, you have to realize what this does. Okay, the marketplace, by the way, I took a screenshot of it, but I wanted you to see this is it today. This is the SPX. And you can see right at the close, they actually got them a little bit below the expected move. Okay, you can rest assured they're going to bid that right back up. Look at that. The market right now, even in the after hours, is $4 higher. It is literally sitting on the edge of the expected move. Why? Because that's the happy place. It's the happy place in the marketplace, and you'll learn, okay? You will learn over time. And I'm telling you, you ain't seen nothing yet because this is such a tradable edge. That's what this business is about. It's about finding any edge and exploiting it, okay, to the edge of what we're capable of. Now, application of the expected move. Our knowledge of expected move became very apparent in the S&P 500, the SPX. I just showed it to you. And other index products. And that became very apparent many years back, and it's something I mentioned. However, the growth of algorithms, okay, which is computerized trading, has created this definitive expected edge in stocks as well. We've actually found that earnings announcements bring heavy trading volumes into the option markets. I think everybody would agree with that, right? Before earnings, everybody trades options in an underlying right before the earnings. Those heavy trades create a solid, okay, expected move to work from. Stocks adhere deeply to expected moves surrounding earnings announcements. I am going to show you what that means. Okay, stocks adhere deeply to expected moves around earnings announcements, and of course, this is the point in time where you should be like, does this crap actually work? Let's look at what the expected move on a few stocks happened to be the day prior to earnings. Then see if the market moves as expected. The proof's in the pudding. That's why I put that picture down there. Okay, listen, we're going to go to several stocks right now live. Let's go to some stocks live. And I'm going to show you how this is done. First, I'm going to go to Apple. Okay, let's go to Apple because I have done a couple of Apple trades recently. Now, earnings are coming up in Apple. Now, I don't like this hindsight garbage, okay? But I'm going to show you some actual trades that I did in the past. Just bear with me. Earnings are coming, but I need to go back here or back here or back here. So I'm going to go back in time. What am I going to go back in time to? First, let's go back to earnings expirations. How do I go back in time? I'm going to go to the Analyze tab. I'm going to go to Think Back. What's Think Back? Okay, it's end of day data. Just hop on with me. I'm going to move the date back. Okay, right back. What did I want to use? Right? Well, I wanted to use April 30th. Let's go to April 30th. Okay, what's April 30th? April 30th is back here. Okay, what you're looking at. Let's zoom in on it. The earnings are coming. The earnings are going to be right after the bell. Are you with me? The earnings are going to be after the bell. What was the market looking like on April 30th? Because what I'm getting at is the expected move here told you what was going to happen here. Are you with me? Okay? Please, are you with me? The expected move, again, here on this day, the day before the earnings, okay, told you what was going to happen the next day. Do you believe it? Do you? Okay. Well, I'll tell you what. You don't have to believe it. Just look at it. So here we are. Here we are. Okay. This is the day, again, before the earnings. Actually, the earnings are going to come out after the bell. The marketplace was expected to move about $10. Now, I'm not saying by the end of the day it's going to be at $10. The market that was supposed to move at some point right in the $10 range. That means a $200 stock should be worth about $211, $212 at some portion during the day. So remember that. The stock should be worth at about $211, okay, to $212 if it goes higher. If it goes lower, the stock should be worth about what? Let's call it about $190. Now, you don't know. Let's call it $190, okay? So, well, it's actually $189 to $190. This is, again, the higher expected move and the lower expected move. You don't know which way it's going to go. That's okay. What happened the very next day? The next day, look at that. The stock moved almost perfectly to the edge of what's expected. Was expecting a $10.45 move. Did it do it? Without an equivocation. Absolutely. It hit it right on. Okay? It literally hit it right on. In fact, it really did move $11 and then it kind of retracted a little bit. Great. That's Apple. You want to do another one in Apple? Let's just make sure that this is not like a total fluke, right? Let's actually come to the next Apple earnings. This one, what is it? When was the earnings over here? 7:30? 7:30? something like that. Okay. So it looks like on 7:30, this was the Apple earnings. Anyway, so on this particular one, go to analyze, and we can do this. By the way, we could do this all day long, going through earnings after earnings after earnings. All I'm trying to show you, okay, is Apple. And again, this one I could come to, I think it was the 30th. That was the earnings announcement. Okay. And there we go. Okay. It's looking like there's supposed to be, again, about a $10 move. The very next day, you're like, oh, it only moved $4. Don't kid yourself. Okay. The very next day, what occurred, here was expecting a $10 move. Did it move $10? You're like, no, it only moved down here. It moved precisely. Look, the stock was trading just below 210. It actually shot up right to the edge of the expected move, then descended upon it. Okay. Again, these things are absolutely spot on. I'll show you another fun one. If you want, you can look at something like, Snapchat. You could look at Caterpillar. I can go on and on and on and on. All I wanted to show you right now, okay, is how to actually use this stuff, right? And when people ask, does it really work? Okay, listen, these things move in predictable ranges. I'm just throwing out, and I just wanted to show you there on Thinkorswim that you could go back and you can look, does this stuff work? And you would know how to do that. But, all right, we move in predictable ranges via earnings announcements. You probably get that part. Now show you the money. How does one profit from these moves? Okay, so this is the important part. Okay, this is the really important part. First of all, okay, you have to know what stocks to do this on, because immediately people are going to be like, something had earnings today and it didn't adhere to what I thought it was going to adhere. I cannot stress to you enough. Got to know the right underlyings to use this on. However, I want to show you, how do you profit from this? Okay, it's one thing to be able to look like, listen, we're looking back in past earnings, and people kind of get it, right? If Apple said it was supposed to move $10, it moved $10. If Apple said it was supposed to move $10, again, it moved $10. If Apple said it was supposed to move, what's Apple supposed to move the next time? Okay, I don't know. Go look. Okay, so Apple's earnings are not for a while, but they're supposed to move like $16. It's going to move more. Okay, does it really move that amount? And the answer is yeah, they really do. They move to the edge of the expected move. Okay, but the whole question is, it doesn't matter. Okay, of the move. Can you actually profit from it? How does one profit from these moves? You got to position yourself around expected moves. You got to get down. You got to get dirty. Okay, how do you position yourself most effectively around these earnings expected moves without absorbing large amounts of risk? Ooh, you know what this is? This, okay, is what we call a butterfly. That's a butterfly. All I'm going to do is say butterfly spreads. Here, this is, and I'm not going to go too deep into this. I don't want you to think I'm going to option totally geek out on you, right? If I wanted to spend an hour or two teaching you butterflies, I'd spend an hour or two teaching you butterflies. All I want you to understand is the logic. So here, this was Apple during like the last earnings announcement, okay? The stock was trading right smack at 200, and it literally, okay, was Apple. The expected move, all right, we're going to put the expected move over here, EM, equals, we're going to say plus or minus, round it, $10. So Apple, okay, was per trade in the next, watch, 3 days. Apple in the next 3 days is per trade to move up or down $10. So that means that Apple is supposed to go to 210, or it's supposed to go to what? Okay, 190. What do? You lay on what is termed a butterfly. Okay, and I can get to every single nuance, but I want to make a point. You lay on a butterfly. What a butterfly will do, okay, is it'll profit if we hit anywhere in and around, okay, the 210. Anywhere in and around 210. If we go to it, your P&L will absolutely spike. Now, anybody can learn a butterfly. You can learn a butterfly. You could go on, in Google, oh, this is a butterfly. But knowing what a butterfly is and knowing how to profit from an expected move are two totally different worlds, and you better clarify that right now. Okay? I don't care if you know what a butterfly is. You have to know how to lay a butterfly into an expected move. You have to hit that sucker dead on. Every nuance of that trade has to be spot on. But if you know how to lay your butterfly on, okay, it's going to be huge. Because I'm going to tell you what, you don't have to be right a tremendous amount on this trade. See, what you have to understand, because there's a lot of new people in here that have no idea what a butterfly spread is. Okay? We're going to call it down here a B-fly, okay, your butterfly spread may cost you 30 cents. Okay, let's get crazy. Your butterfly spread may cost you 50 cents. But if you lay that butterfly perfectly, okay, and that stock, let's call it a $200 stock, okay, and let's say that thing goes right up to 210. If you lay that butterfly on perfectly, and all of a sudden you pay 50 cents for it, your 50 cents could easily be worth $2, okay, $2.20. It could easily be worth $3. That butterfly, maybe it could be worth as much as $5, okay, for a trade that you paid 50 cents for. The whole key to this butterfly strategy, okay, is very simply put, it's factoring in where to put the butterfly. You got to put the butterfly on correctly. You got to put it on in the right time frame. You got to take it off in the right time frame. You have to know the exact percentage to make on the butterfly, okay, and it's going to work quite nicely. Now, again, what a butterfly is doing is it's playing, and again, I want to reiterate this, it's playing target practice around the edges of the expected move. And I know that somebody's going to ask, well, could I put a butterfly here and a butterfly here? That way, if we go up or down, I'll profit. And the answer is nope. If you do that, you will lose money. You will lose money if you do that, okay? Can teach you how to pick the right butterfly, to be bullish, to be bearish, all of it, okay? Listen, this is why you want to use earnings butterflies. It is the highest rate of return surrounding an earnings announcement that we know of. Hey, you know what? Maybe somebody's got some secret squirrel strategy. Listen, I'm not out there trying to sell a bunch of options, okay, and taking extraordinary risk. Do you realize that a butterfly is going to cost you a couple pennies? The butterfly is going to cost you a couple pennies. So if you're dead wrong, let it go. Extremely low upfront cost and overall risk. They're going to cost you 10 cents, 11 cents. I got a butterfly I'll show you in a minute. It cost me 11 cents. I've got another butterfly that cost me as much as, but still my heart, it was like 50 cents, okay? Really low upfront cost. You never need to buy or sell the stock, and it provides a really consistent earnings trade. And you don't have to continually monitor the markets. You don't have to continually monitor the stock. If you were going to trade earnings, I'm telling you, you need this in your life. Earnings are not easy to trade. People take shots constantly. They don't know what the hell they're doing. They don't even look at the expected moves. Listen, earnings, butterfly spreads give you the power to trade massive stocks. You can do this on Amazon. You can do this on Google around earnings with mere pennies at risk. Now, as I said, the proof's in the pudding. Do you think I'm showing you examples that I haven't traded? Because here's my live trades. These are live trades. By the way, every single trade that I'm showing you here was presented live on TheoTrade, meaning that these trades were done in front of clientele. This is a live earnings fly, okay? By the way, I call these earnings flies. And these are the trade examples. These are actual trade executions taken from Thinkorswim. If you guys have Thinkorswim, you'll know this is an execution. Here's one that was actually placed April 30th. Okay, I paid a 72-cent debit for it. So for every $72 invested, I got back, okay, $232. It's a 222% return. All right, you're like, okay. Listen, that's exactly what I just showed you. This happens to be nothing more than a $5 wide butterfly. And the $5 wide butterfly, I bought it one day for 72 cents. Okay. I sold it. You can look at the date. I don't care. Look at the date. Look at the exact time. I sold it. Okay. For 232. I hit the fly. He hits a fly. That's not bad. 222% return. With a 200% return, you realize you don't even have to be right that often. Because if you paid 72 cents for this thing, you paid 72 cents for this. What happens if you missed one? Oh, I lost 72 cents. Who cares? Go do it again. Oh, I lost another 72 cents. Who cares? And on the third time you do it, okay, you make $2.32. Guess what? It doesn't matter that you just took 2 losses because in the third one, you just clocked it out of the park. Okay? I'm not out here picking up nickels and dimes in front of the bulldozer. I'm the guy, okay, that's chucking pennies in front of the bulldozer, except I'm riding on the bulldozer. You got to realize this is the opposite. I am actually buying the edge of the expected move, okay, and telling you, earnings, they're going to drive right to the edges of these expected moves. Wait, if you don't like that one, I love Apple. I love Apple. Here's another Apple one, okay? I love Apple because Apple, there's so many options traded in Apple. Listen, this is the next earnings announcement. I'm sorry. I had to wait to the next earnings announcement. Earnings, it's like, it's gravy. It's a good time. In this earnings announcement, I paid 52 cents, 52-cent debit for that little monkey. You can see the exact time. That was right before the earnings. Literally, it was like an hour before earnings. Okay, the day I got out of it, I actually opened it for 52 cents. I closed it for $1.40. I want to reiterate something here. Okay, what do I want to reiterate? You know, you could lose 52 cents. Oh, for every $52 that I invested, I got back 140. By the way, you don't have to do it for 52 bucks. And hey, wait a second. Don, I know what's wrong with this trade. There's 3 legs to it. There's a lot of commissions in here. You know what's awesome? Okay, one of the reasons I really wanted to do this, commission war. You're the big winner. Who cares about commissions anymore? They basically have gone to nothing. It's freaking utopia out there right now. You could trade 3-legged butterfly spreads. Okay, TD Ameritrade at 65 cents a contract. Okay, I mean, for really active traders, they'll still give you a better deal. It's crazy. It literally is like utopia for trading these things. But you don't have to do it for 52 bucks. Okay, you could do one for $200. Okay, and $200 would return you what? Well, it'd be 4 times this, so it's 4 times 14. Next thing you know, okay, you're looking at like almost a $600 profit. It's 169% return. That ain't bad. Okay, that ain't bad. Not for holding a position like overnight. So what? Take a 52 cents. Are you comfortable losing $52? Because you have to be. Because you're going to strike out. And you're going to strike out. Then you're going to get a home run. What our members are saying. Thanks for last night's video on Apple earnings. You do realize that the trade that I showed here, I talked about those nightly videos. This trade was done on the nightly video. I talked specifically about it. Okay, you can go back and actually look at the videos and I talked about, I executed it while doing the video. I actually executed the strategy. Thanks for last night's video on Apple earnings. I set up the same trade and it looks like max profit tomorrow. We hit a couple of really big butterflies recently. I'm not done. This is actually another one. This is a cat earnings fly. Caterpillar. Okay, by the way, Caterpillar, I was doing this one right around the same time as the other ones. Okay, Caterpillar, what did I pay? 36 cents. That's $36. If you do one contract, one unit of this thing, it's going to cost you 36 bucks. I got back $101. It's 181% return for holding a position, basically a day. It's huge, okay? And again, all I'm doing is aligning expected moves. Now, I know everybody's like, I want to learn to do it. I want to learn. Bear with me for a second. That's another one. Here's another one. Snapchat. You're like, that is a worthless piece of crap stock. I don't care what you think about Snapchat. You know what I think? I think $11 for a butterfly is a pretty good deal when you're getting back 30. It's 173% return. Okay. This one, I loaded the boat. Meaning like, you can go out there and you can do 10 contracts, you do 20 contracts, you do 50 contracts. That's up to you. Okay. You can go out there and make this an $1,100 trade, returning what? Okay. $3,000. It's big. It's whatever you want to do. Okay. Whatever you want to do. Okay. We teach the allocation of this because you have to know how to allocate capital effectively. Another one with what our members are saying. I know this is long, but I'm going to read it to you anyway because it just came in. Hey, listen, this is one that just came in this Saturday, right? It just came in Saturday. Just want to thank you for the month to welcome and express my admiration and appreciation for all that you and TheoTrade team are doing. In October 2018, I retired from Banner Health. I was one of those who many years ago purchased the InvestTools education package for approximately $25,000. By the way, I'm not picking on InvestTools, okay? Because myself and another gentleman here, okay, we actually worked with InvestTools. We worked with TD Ameritrade, and we actually put together the book for InvestTools. This used to be a $25,000 package. What we do at TheoTrade blows it away. Due to circumstances, I was never able to get my investing off the ground, partly because of fear of loss. Okay, had to manage the 401k. Since February of this year, I subscribed to a number of services because I thought that I could receive advice, guidance to help grow my account and minimize. Okay, from what you've said on the calls, I think you know the story. Right? After spending thousands more, I was still trying to survive with calls and puts, which, by the way, doesn't work. They all presented another service for a fee. And I fell for that a few times only to get nowhere. Basically saying it's my fault. I was so thankful when I found TheoTrade. And for what I have experienced so far, the live trading chat room, okay? I get on, by the way, 6:30 in the morning Pacific time. Corey's Corner, in-out spreads, infinity spreads, futures, all the support has literally given me the hope I'll be able to save a retirement in the future, okay? None of us know what the future, so time will tell. You were so correct in saying capital preservation is the key. That's why I'm presenting this strategy, okay? At least for people like myself. I'm learning as fast as I can, looking forward to all the time to get fully up to speed. Thanks so much for the live chat room, making the information available to us in a professional, affordable manner. Okay, TheoTrade is absolutely the best. And I wanted to take the time to read that because it's important that you guys know, like, listen, we're presenting strategies like this so you don't get hammered, so that you can actually make good percentage returns. You can cut through the learning curve, cut through all the crap out there. Commissions, forget about commissions now. Okay, in effect, all you have to do is to get educated. That's the point I want to make with this. All you have to do, I mean, listen, you have to pay $25,000 for education. That's what it costs. That was an 18-month package, okay? The stuff we do here at TheoTrade smokes it. And if you got no time, don't worry about it. Each and every trade today shown was displayed live at TheoTrade. The trade results, okay, first of all the trade results I show are real. In fact, okay, this is a live trading account. This is my IRA. So I don't mind showing you, okay, anything and everything, okay, about a particular account here. So this week, you can actually see progress, all right? When I say progress, you know, most people like hide the account balances and stuff. Here's progress, right? This week, we're up, okay? Today, what do I have today? I'm up roughly just shy of $6,000 today. These are all live trades, up $6,000. And I'm only tying up $53,000 right now to make $6,000. But that's today. Like, that's what I did basically today. It's over, okay, a 10% return that we've actually hit today in this marketplace. It's, again, all the trades that we do over here. And as I said, this is stuff that everything I'm doing right now, this is in an IRA. This is not in a funky account, okay? It is what it is. Now, the earnings fly. It's a hands-off, and it uses what we call set and forget order types. And that's perfect, okay, if you don't want to sit in front of the screen all day. Even a fraction of your time, it's enough. It's hands-off, okay? The characteristics of earnings fly spreads. The attributes of this trade, I believe, are undeniable. You never have to buy the stock. You've got really minimal risk. The risk is limited to precisely your comfort level. You don't need to use a stop order. There's no stop orders in here. Profitability can be extremely high percentage returns. It's the perfect spread also to reduce the risk of a stock portfolio. Okay? You can reduce risk. Okay? It's also an excellent tool for those seeking returns to build a smaller account. I'm showing you the trade down below. And the reason I love the Snapchat one, it's an 11-cent trade. You know, you couldn't really do an 11-cent trade a few weeks ago because the commissions eat you alive. But now the commissions don't eat you alive as a retail client. I've always had low commissions. I worked at the brokerage firm for 15 years. Now, okay, it's utopia. As I said, it's utopia, okay? But you got to learn to build this thing. And I don't want you to let the options intimidate you. The butterfly spread below is being done for an 11-cent debit. But the spread, this thing is a massive power saw. And that's, you know, it's an analogy I use all the time. If you're going to go out and you're going to build a house, you could use a handsaw, you could use a power saw. Of course, the handsaw will get the job done. It'll just take you 50 years, right? The power saw, it's fast, it's clean, it's great. But if you don't know how to use the power saw, you're going to lop off a couple of fingers. Options are going to be the exact same thing. You want to use this butterfly? Listen, you want to use this butterfly? Use it. Use it incorrectly, you're going to cut off a couple of fingers. Options are the power tools, okay, of the marketplace. You could do earnings, fly spreads all day long. Maybe you don't know options, okay? Maybe you have limited experience trading options. Don't let the options part intimidate you, okay? Because I'm telling you that you need these strategies for the foreseeable market future. It's all about taking small, incremental risk. Because if you take big risk, you're going to get tweeted upon. You know what tweeted upon means? Oh, come on. You just had it happen today. It was Jerome Powell. It was the administration. It was China. It didn't stop today. Okay? Navarro came out also tweeting today. It was like a Twitter, again, fest. You got to take small, incremental risk. You know, people are still stuck on, you should always do this, you should always do that. Wake up. That was 10 years ago. Selling options premium is as dead can be. You're going to die trying. I grew up selling options premium. You have got to learn how to play small incremental positions. Don't let this stuff intimidate you. Okay? If you gave me a couple of hours, we could teach this to you. We can show you how and when to place earnings fly spreads. Okay. What we do here at TheoTrade, we create detailed recipes for every strategies, including earning fly spreads. You know, you don't bake a cake without a recipe. You shouldn't trade without one either. It's about recipes. You know, I always call recipes, it's a pre-flight checklist. If you're going to go fly a Boeing 737 MAX, I'm just kidding. But if you're going to go fly an airplane, you're going to have some type of a checklist. That's what you do for trading as well. I mean, do you have a checklist? Listen, this is what you need to successfully enter and exit earnings fly spreads. First of all, what makes a viable earnings fly candidate? Obviously, Apple's going to work, but you need to know exactly, okay, what's going to make the right candidate. What volatility should I seek out? You need to know the volatility because that defines the expected move. What options expiration do I select? Should I do 3 days, 3 months, okay, 3 weeks? Wait a second. I want to go back to that for a second. What options expiration? Oh yeah. Don't worry too much about options expiration. 3 days, 10 days, 17 days, 24 days. Set, hike. I mean, it's insane. You want to pull up something like the spiders? Okay, the spiders. These things have earnings. Well, I shouldn't say earnings. These things have expirations. 1 day and 3 days and 6 days. There's no earnings in the spiders. But I can't stress enough. There's so many options on options these days, right? Options expiration. You got to select the right one. You got to figure out the delta of the option you buy. You got to figure out the delta of the option you sell. What expected move do I use and how do I determine the positioning of my fly? Okay. How do I build the trade? What's the right amount of risk for me? Allocation. You got to know exactly how many contracts to do, how much capital to put up. Let me show you, okay, what we do here at TheoTrade. We create recipes in trading. Okay. Trading, people, it's all about the what ifs. What might be a good stock or ETF candidate for an earnings fly? What's the correct options expiration? Okay, to buy my earnings fly, how much capital do I commit, right? Allocation. Okay, what strike price options do I buy? How many? How many do I sell? It's a 1 by 2 by 1. Do I do a 1 by 3 by 2? In growing a small account, what should my allocation be? Right? If you want to grow a small account, it differs. We have the answers to all those questions. That's what we do here at TheoTrade. We build recipes with definitive criteria, checklists for each strategy and each unique variable. What if the stock goes up? What if the stock goes down? If it goes left, it goes right. If expiration is coming, think about it. We have the answer to all the questions because what's the right probability for the trade? How many option contracts? When do I close the fly? What if the stock sells off big? What's the correct return for the strategy? What if the stock rallies massively? Can I fix a losing trade? It's a how, it's a when, it's a why, it's at what price. People, it's just the beginning of the many variables you're going to face. Think about all the different variables out there. It's endless. That's what trading really comes down to. We can tell you all the different variables because we actually build an entire core structure around those variables. Stock goes up, stock goes down, how to get in, how to get out. It's a pre-flight checklist, but then when you're actually flying and you're in the trade, it'll actually teach you what to do to manage the trade. Okay? Listen. You can read what a butterfly spread is. You might even know how to trade a butterfly spread right now. Listen, you can go on Google. Right here, right now, you can Google. You will get no less than 1,000 pages that'll tell you what a butterfly spread is. Not one of them will give you a recipe for success. None of them, okay? They will never give you 20 plus years of trading experience. Access to client order flow for 15 years. This is what we do to build these recipes. We have viewed and studied millions of trading accounts, ran education for over 15 years at a firm, which is TD Ameritrade, with the largest options order flow in the entire industry. That is how we build, okay, our criteria. Criteria, it's your recipe for success. The following strategy and the corresponding criteria require the utmost attention to detail. We spent years fine-tuning this trade setup, especially, okay, this earnings butterfly. We can tell you what to do, when to approach it, and the section on criteria, follow the steps to build a trade. Okay? What I'm saying is we built an entire course specifically around the criteria for the earnings fly. That course is coming up. It is a guide to maximum edge trading earnings. I'll be the trade instructor. The course is live October 19th. It's a 3-hour course. The class slide deck that includes all the entry and exit criteria. It's the checklist. It is available on October 19th. It's the morning of October 19th. We released the slide deck, okay, which is a PDF, and it has all the checklist and the criteria. That course is recorded, and it's archived for TheoTrade mobile. We have a mobile, okay, app. So if you're iOS or Android, we have a mobile app. You could watch this course. That's, by the way, the course is not going to happen till October 19th. The course is absolutely taught live. That is a Saturday morning. But we get it. Maybe you missed something in the course. Maybe you weren't up to speed in the course. Maybe you couldn't necessarily sit there the entire time. We record it. We archive it immediately for mobile and web use. You could be at 30,000 feet watching this particular course. Again, it's a guide to maximum edge trading earnings. The course is $497. Let me give you the curriculum for it and stick with me, because I'm also, in a moment, we talked about that earnings indicator to begin with, and we promised you, okay, that we would provide you an earnings indicator, and I will here, okay? Just give me a moment, because I want to go through the curriculum of this course. I want to make sure everybody understands for $497 what that curriculum happens to be and what you're obtaining throughout the course. Now, the guide to maximum edge trading earnings, these are some of the key points. First of all, number one, how to use earnings butterflies like seasoned traders, okay, to generate consistent weekly returns during earnings season, okay? How you can predict with a high probability where a stock price is going to go, all right, after the earnings announcement. That's the expected move. How you can trade even the most wild earnings announcement. Low risk, high probability of accuracy. Earnings butterflies, they're great for small accounts. They really are, okay? You take minimum risk, generate large returns. How to use defined risk reward strategies to never lose sleep. So these little earnings butterflies, who cares? They go against you. Like, oh, I lost $50. Okay, $50, and the commissions are next to nothing on them right now. Right? It's huge. How to build your own earnings butterflies. One of the most important things. We're not just going to talk about like, you can follow me into this trade. You will learn to build your own. You will follow the step-by-step criteria. Okay, and yes. After the class, we give you earnings butterflies. We do it constantly. Which stocks make the best candidates? What strikes? What expiration cycle? The highest probability of success? When to open the trade? When to close the trade? Okay, why trading earnings announcement does not mean that you have to be glued to your screen. And the earnings butterflies can be done with minimal options experience in retirement accounts. I'm going to be trading in my retirement accounts or a large account. Okay, you do have to have $2,000 in the account. That's the requirement, $2,000 in the account. Number 12, you must follow the recipe to build it, okay? These, again, they're all the key points that I want to make about what this class is going to provide to you. There's also a heavy allocation component, because I want to make sure that when you go out and you allocate capital, well, I'll save that for the class, because I don't want to give away the allocation portion of it, because it took a tremendous amount of time. All right. Everybody, I want a bonus, okay? Listen, at TheoTrade, we go beyond one class or one indicator. Everybody wants everything, okay? You want everything to trade, you want everything to invest, and you want it at one place at one price. Listen, you don't have to pay for commissions anymore. So what do you have to pay for, okay? You got to pay to get educated. And I think $497 is spectacular to do that. But me, I am sick and tired, okay, of classes after classes after classes after classes. Everybody sells you a class. $497 another class. $497 another class. Okay? How about this? This is bonus number one. You have access to over 85 trading classes. You're going to enroll tonight. We're going to give you access to 85 trading classes. They're all going to be available immediately. These are classes that we've already done. Okay? There's also, like October 19th, there's a new class coming. What class is this going to give you access to? First of all, we're going to give you a class that's coming up, obviously, Maximum Edge Trading Earnings. We'll also give you access to Guide to Small Account Growth with In-Out Spreads. This class, okay, the Growth to In-Out Spreads class, was an absolute hit, okay? We just did that a couple of weeks ago. It was a hit. When I say a hit, we couldn't believe the response to that class. How to collect income being short, the next big short. There's the risk twist spread class, the infinity spread class, the iron up class, the sell minimize your risk, survive and thrive in extreme volatility. There's a day trading NASDAQ futures class. There's a covered calls class. There's essentials, people, pairs trading. If you name a genre of trading, there's 85 trading classes. Okay, it's access to over $9,000 in classes alone. How's that for a bonus? Are we good? By the way, I didn't do all 85 classes. I mean, is it a good bonus? $497. You're not buying one class. You're buying them all. Here's our instructors. There are classes in here by Jeff Bierman. He helped build the Thinkorswim charts, the TD Ameritrade. He was the chief market technician. Okay, Matt Williamson, he's our market neutral. He's our premium selling option strategist. We have specialists in each area. Corey Rosenblum, he's our senior strategist. He's our resident swing trader. Brandon Chapman. Brandon actually worked with me, okay, at TD Ameritrade as well. Macroeconomics, technicals, fundamentals. By the way, did I mention, okay, Jeff Bierman's also a professor of finance at Loyola. He actually moonlights with us at TheoTrade. He's a professor of finance. You want to go to Loyola? It's $42,000 a semester. You get Professor Jeff Bierman, okay, live and uncut on a daily basis here. We have Steve Slim Miller, 43 years in the marketplace. Last but not least, Tony Rago, or NASDAQ Futures. Listen, this ain't a one-trick pony, okay? There's 85 classes we're going to give you access to. It's over $9,000 in classes. You're not going to get that anywhere. The education that we give you is unparalleled anywhere, at any price. I don't care if you go out and spend $100,000 on your stock market education. It ain't going to compare. This is a bonus on $497. Okay? That's the TheoTrade instructors. Here's the second bonus. All access TheoTrade VIP membership pass for free. We're going to give you 3 months unlimited access to TheoStream. What does that do? It includes a live trading chat room. Okay? We're going to broadcast live 6 hours a day. We trade live in the room. I know people are like, I can't. I work for a living. It's all recorded. Don't worry. Okay? We email you out trade ideas. We do video updates on trades. We have 5 distinct trading portfolios. Okay? We do the infinity spread in here. We do in-out spreads. We do butterfly spreads. You name it. And there are daily coaching sessions with timely topics. Oh, by the way, the best part of this, not only do we give you access to 3 months. Okay? You're like, 3 months from when? From today. 3 months from right now. You're going to enroll tonight. 3 months out, you still have access. And I'm going to tell you right now, this is not a membership. Okay? We've killed the idea of membership off. Forget it. We just want you to have access for 3 months because you're going to need the 3 months. Why? Because you're going to trade live with us. Okay? It's not fair for you to go to a class and somebody just go, okay, you went to the class. No, go run along and do it yourself. It's ridiculous. You got to have somebody with you. We also directly answer your trading questions via email. You can email us, support@theotrade.com. As long as you, okay, are a client for that 3 months, we will answer your trading questions. And it's not Joe Schmo answering it. It's our instructors answering those, okay? It's these guys. It's a pretty good deal. I think that's worth $497 right there. It's like $1,000 in support trades and insight. I'm not done yet, okay? This also, by the way, this is also still under bonus number 2. It also includes 59 proprietary indicators and scans. We'll give you the auto expected move, earnings expected move, gravity points, the TheoTrade RSI Laguerre, Quantix, NQ levels, next generation squeeze indicator. It goes on and on. The SPX expected move. Those are the ones I feel strongly about. You know what? So many different education firms. You go to a class and what do? They sell you another indicator. They go to a class, sell an indicator. We give you all the indicators. We give you all the support. We give you the trades. We give you the chat room for 6 hours a day. What else do you need? TheoTrade includes everything that you need to invest and trade. It's classes, it's coaching sessions, it's email access to the instructors, it's a live trading room and live trades, it's indicators and scans, it's mobile access 24/7. We have mobile devices. Okay, I mean, literally, we have mobile apps on here. It's everything that you need to succeed. We have built at TheoTrade the Netflix for traders. All right, you hop on there. It's every genre of trading you can imagine. You get support. You get everything. All of it tonight. It's $297. That's the special this evening. It's $297. That'll include everything I just talked about. It's the Guide to Maximum Edge Trading Earnings course. That's included, okay, in this unlimited streaming. Access to 85 classes. There's new monthly classes too. In the next 3 months, every single month, you're going to get a new class. So you're not only going to get the class that's coming on October 19th, you're going to get a class in November. You're going to get a class in December. It's a live trading chat room where we provide real ideas, real insight, okay, real trades. We broadcast 6 hours a day. It's 59 proprietary indicators and scan. It emails out the trade ideas. It has daily coaching sessions, okay? Listen. This is what TheoTrade is about. Go now, okay? Go now to TheoTrade.com/edge. It's ED, so that's Echo Dog, okay? Garbage Echo. I like that one. I don't know what G is. I don't know what a G is, okay? It's TheoTrade.com/edge. All right, go there right now because I'm going to make it even better. This is something, okay? This is, you like that? Echo Dog Garbage Echo, okay? G is for garbage. I like it. Go there now because I'm going to make this even better for people because it's $297. We just dropped the price from $497 to $297 because we want to enroll people. And we're going to make it even easier because we kind of believe, obviously, in what we're doing. Again, a bunch of us come from the brokerage world. What we really do here at TheoTrade, we build traders, right? We're going to make TheoTrade a completely riskless trade. Everything you need to start trading from novice to expert. If you tell me you're a novice, that you've never traded ever before, fantastic. I'm going to show you in a minute. We have an entire start here menu. Okay? Oh, it's golf. It's supposed to be, instead of garbage, it's golf. I apologize. Everything from novice to expert. We're actually going to provide a money back guarantee. And this is not something that I take lightly. Okay? And I'm going to give you the stipulations on it. You enroll tonight. You trade with us over the next 3 months. If you're not completely satisfied, email support@theotrade.com. You must provide us the details of your trades and you receive a full refund. People, come on. It's $297. You think we care? We actually want to build a better trader. Why do we want to build a better trader? Because we have relationships with all the brokerage firms. What do you think the brokerage firms want? They want traders. Okay? Here's the money back guarantee stipulations. And I'm deadly serious about the stipulations over here. You got to do 10 trades in the next 3 months. And you got to follow the earnings, edge, butterfly criteria. You follow the criteria, you don't love it, we'll give you your money back. The initial account value, when you enroll for the course, you got to have at least $2,000 to do those 10 trades. Okay? By the way, I also want to throw this stipulation. You got to follow our criteria out there for earnings butterflies. Don't make your own crap up. You follow our trades and you have to provide a real account statement. Oh, yeah, by the way, I was in the brokerage business for 15 years, so don't give me your paper trading account. I didn't like my paper trades. 10 trades, 3 months. Come on, you can do 10 trades in 3 months. You don't like it, we'll give you your money back. It's a riskless trade. Okay? It is a completely riskless trade. And we do that, first of all, it's only $297 anyway. Think we care? Oh, no, it's $297. It's 3 months of trading activity for $297. You can email us. You email us one time, okay? We give you some inkling of a suggestion that will help you in trades. Don't you think it's going to save you more than $297? Okay? We do this to get you in here, to get you involved. Make it a completely riskless trade. Get into TheoTrade now. We're going to work with you directly. You want to email us? Email us. You want to talk to us in the chat room? Talk to us in the chat room. There's only 50 spots open tonight, okay, on the TheoTrade riskless deal. That's it. By the way, after 50 spots, there's no more riskless trade because you know how much time it takes to work with 50 people directly? Okay, there are 7 full-time instructors here. And basically, we can take on a couple more people, each class that we do. We also have a problem of matters of trade size. We're going to trade live, and we're going to trade with you. And when we do that, we go into Apple. If we've got, by the way, right now, okay, there are about 4,000 people on TheoTrade. There's 4,000 people on TheoTrade. When we come and do a trade, okay, we're big. We let 50 people in, period, at a clip on these new classes. Done. At 9 a.m. Central Time on October 19th, the 297 deal is gone. Okay, we do that. We want you in here. Okay, we want you to trade. Listen, what our members are saying. By the way, you guys are rocking it. Very impressed. You guys are putting this together, sharing knowledge and not upselling everything and turning and burning your customer base. By the way, it's $297. That's it. And somebody's just asked me, I want to continue after 3 months. How much is it? It's $297. We don't raise the price. This is not intro. I hate that crap. It's a riskless trade. Do it. Okay? Don is the most knowledgeable person I've ever heard in my 50 years of stock investing, and I've listened to many. His knowledge of the markets is like work is like sitting next to a finance PhD. Highly recommend learning what this man has to say. I'm very impressed with TheoTrade. I've studied, under stock coaches, various, strategy intellects and different trading plans. I've not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful, extremely knowledgeable. I'm looking forward to this association for years to come. Listen, right now, TheoTrade access you get today. It's $297. That includes the Guide to Maximum Edge Trading Earnings class. It's October 19th. All the bonuses. Bonus number 1, 3 months, total access to everything that we do. Daily trading for 6 hours a day. Everything's archived 24/7. Everything's archived. We email you trade ideas, all the trading indicators and scans, daily coaching sessions. Okay, 10 hours of live support. You can email us. Please do. We work with you one-to-one, right? Bonus number 2, unlimited access to TheoStream. That's 85 classes. There's day trading, swing trading, technical trading, options. Okay, new monthly classes. Go to TheoTrade.com/edge. Now, bear with me for a second because I'm going to show you something here that you need to see. First of all, okay, right now, everybody go to TheoTrade.com/edge. That's Echo, okay, Delta, Golf, Echo. I got that right. So it's TheoTrade.com/edge. Follow me to this link for the earnings expected move indicator. Well, now I'm actually going to bring it up. So let's actually cruise over there. And I'm going to also introduce you a little bit to TheoTrade. So here we go. Welcome to the TheoTrade.com/edge page. And I'm throwing this up over here. Click add to cart. It's $297. And again, everything that's included is explained. We're right there to be able to answer some support questions. Everything, okay, including the bonuses, 85 masterclasses daily, day trading, swing trading, bonus number 2, all the support, private live trading access, okay, all the turnkey portfolios, email support, 59 proprietary indicators. It's $297. At the very bottom of this page, at the very bottom of the page, the earnings expected move indicator for Thinkorswim is available in there, okay? Again, click here to add to cart, enroll now. We're also here. You can click right here to get one-to-one support. You can chat now, okay? You could call us now. We prefer hit add to cart. Hit add to cart, you're in there, okay, and you're ready to roll. I just wanted to show you what it looks like. This is the enrollment form. Obviously, some generalized information. It's $297. And again, tonight, for the first 50 people that get on here, we make it a completely riskless trade. And we'll let you know, okay? It's the first 50 people. We'll let you know after we actually clip through the first 50 people in here. There's almost 1,000 people in the room tonight. All right, let's actually jump back. If you're curious what TheoTrade looks like, and again, I'll throw the address up there one more time. It's TheoTrade.com/edge. We're going to answer some questions momentarily. Hang with me, okay? This is what TheoTrade looks like. This is the live trading room. This screen right here is broadcasting in the morning for 6 hours a day. Down below, okay, down below, these are all the clients talking to one another. You can chat in to us. You can see right here, this is Corey Rosenblum. Who's Corey? Corey's one of our instructors right there. He's one of our instructors, okay? And he's actually in there chatting back and forth with clients. And yes, it's after hours. It doesn't matter. We always are man everything in here. We've always got people to help you, okay, throughout the course of a trading session, okay? And I want you to see there are literally, okay, thousands of people in here throughout the course of a day. By the way, you wouldn't even believe me if I showed you how many messages go through there in a day. The next thing, okay, this is what our class archive looks like. So when I talk about classes, we have option classes and option newbie classes. You know what? Somebody might be coming in here. It's the very first time you've ever been involved in this business. And you're like, I'm scared. What am I going to do? Okay. What am I going to do? First of all, if you've never traded anything before, forget about the option strategies. Go over here to a start here. You know what start here does? Okay. Start here right there. It's the absolute basics. It's for the novice. Options 101, options 201. Okay, options 301, order execution. After you've gone through these videos, and by the way, you're going to, even if you're really experienced, please go through getting your risks under wraps, risk control and hedging ideas. Every one of you tonight, okay? I'll tell you what, you talk about a money back guarantee. I guarantee you that this one section right there, this one section, that'll change the way you forever think about the markets. Plain and simple. That one, getting risks under wraps, that's worth $297 10 times over, okay? And people don't realize it until they've actually experienced what we have here at TheoTrade. It's going to change the way that you guys view the marketplace. You're absolutely going to love this. After you've gone through start here, then jump in. These are the archives, right? You want to go day trading, you want to go trend trading, you want to go hedging, you have access to all of it. We don't, oh, you're this, you're that. Forget all of it. You get access to everything. Here's option strategy classes. Again, people nickel and dime you. Okay, here you go, sell premium. The next big short, all right? How to collect income being short. It just goes on and on and on and on. And we continue to add classes, right? Again, here's another class. This was just recently done. Guide to small account growth with in-out spreads class. Seriously, click on the class. How does a class work? Oh, right there. You download all the criteria of the slide deck. Okay? The class starts to play. You can maximize it, right? And this is literally the class. All right? We literally get into the class right here, right now. It's kind of cool. There's the start here menu. By the way, any genre of trading you can think of, you can search. This is like the Google, literally the Google for going through and learning about the market. You want to know about spreads, expected move spreads. You want to learn about volatility. Okay, type it in over here, implied volatility rank. You name a topic and a genre in trading, we've got an answer for you. I'm telling you guys, you're going to love what we do here at TheoTrade. Click add to cart. It's $297. And again, we made it a riskless trade, and I'll define precisely what that means. Bear with me here for a moment because I'm going to actually pull up some questions. Again, I want to give this. It's TheoTrade.com/Echo Delta Golf Echo. All right, /edge. Go to this, click add to cart. Again, we'll give you all the different indicators in there as well. Now, allow me to answer a couple of questions for you. Listen, I'm going to jump back to my slide deck to answer some general questions to begin with here. And some of those general questions go like this. Let me answer a few of these. Okay, again, I put the web address down here. As you guys are enrolling for this, I'm going to go through this. The first question always comes up, and people actually put this in here, is what do you need? You need a laptop, you need an internet connection. You don't have to have a ridiculous trading computer, a laptop, internet connection. In fact, today, I'll make an argument. You don't even need a laptop. You could probably do this off your mobile device because you can trade butterfly spreads in the mobile device. We have everything that you're going to need to get started. Commissions have gone basically to free. What do you got? Okay. You need education, and that's what we're going to do from the absolute novice to the most extreme. And if you're an extreme trader, I think you're going to realize, okay, this is also for you. Because you want to get extreme, I'll get extreme with you. This is not a membership. I wanted to throw that out there. This is not a membership. Okay? We're not going to auto-renew you. We're not going to auto-bill you. I don't like it. And we just gave you, a money-back guarantee. This is not a membership. Number 3, TheoTrade archives everything. Every word that we say. Listen, we understand not everyone can watch live trading throughout each trading session. Do you know what we also have? The archive material you could play back at 2 or 3 times the speed. If you don't like us at this speed, you could play us at twice the speed, 3 times the speed. We provide you access to a mobile application, and you can download and view at your leisure. You can email us anytime, and you will receive a response within 24 hours, including trade-related questions. You can email us and say, what do you think of this trade? And we're going to say, don't do it. You screwed this up. We give you immediate feedback on your trades. It is worth it. Okay? All right. Next, you will gain access to every course TheoTrade has done in the previous 4 years, including classes, coaching, live trading sessions. Everything is searchable. Okay? Name a trading topic, and we have an archive on it. Number 7, all of these trades can be done inside of an IRA or retirement account. You have to have as little as $2,000. Okay? We at TheoTrade can also help you get approved for options trading at several major brokers. So don't tell me I can't trade options. We'll help you. We'll give you the right names. We'll even give you the names of people at the brokerage firms. Number 9, at 9 a.m. Central Time, October 19th, the $297 deal is gone. I'm telling you, for the first 50 people that enroll tonight, they're getting the riskless trade. But on October 19th, the $297 deal is gone. You got to get results. You got to take action to do that. Enroll for TheoTrade now. Okay? There's just no risk to you whatsoever. Now I'm going to answer a few more questions. You guys can read through. Again, in-out spreads we've done. Again, I can go on and on with what our members are saying. By the way, the archives of TheoTrade are a godsend. You can stop the tapes, reverse the tape, make notes, use the information. TheoTrade topics and content are right on target. Really getting a lot out of the classes. My trading results are improving thanks to TheoTrade. Keep up the great work, Don, from Gary. Okay? It's very cool. We really do appreciate the feedback. And I ask you guys, hey, Give us feedback on this stuff. We want it. I mean, that's what this is about. Again, back over to this page, and I want to pop in the address one more time, and I'm going to answer a couple of more very specific questions. Again, it's TheoTrade.com/edge. Enroll today. It's $297. If you have questions about that money back guarantee, fire them in. Okay. Doug was actually asking a question. Okay. Who moves the underlying? Institutions, hedge funds? Today, it's all algorithmic trading, Doug. It's all algorithmic trading. There's no hedge funds moving it. I'll make an interesting argument. Because it's now free commissions for the retail trader, retail traders are moving markets these days. Retail traders. You're like, the little guy? The little guy. They're moving markets these days. Why? Okay. It's a brave new world out there. Number 2 came in from Jim. Is expected move equal the probability cone? Partially. Actually, the probability cone on Thinkorswim, that was actually my doing. The expected move is not the probability cone around earnings. It is not the probability cone. So you would need the expected move earnings indicator to get the earnings expected move. It's totally different. Okay? Next question came from Fred. By the way, Jim, I hope that's okay. All right? By the way, Carl just said, I'm not available on the 19th. Everything is recorded, Carl. Literally, every single thing we do is recorded. By the way, when we record something, we post it immediately, like instantaneously. It's awesome. Fred came in with a question. He said, when option prices differ, is that a directional sign? Fred, absolutely not. If option prices differ, it's either a hard to borrow, there's a dividend coming, there's something you're not seeing. If ever you have a question, Fred, about option prices looking a little funky, let me know. I'll tell you why. I'll tell you exactly how. Okay? The how, the why, the everything. All right. By the way, I want to thank, we've actually got Keith from, looks like San Diego, Dale from Arizona, Ron from New Hampshire, Scott from Arkansas, Phil from maybe Minnesota, okay, Tomas from California, Ara from Arizona. I am sorry if I butchered your name. These are all individuals that have just now enrolled for TheoTrade. By the way, you enroll for TheoTrade, hop in the chat room tomorrow morning. Again, when I say the chat room, right here, hop in the chat room, okay? Come in there and be like, hey, I'm brand new. Everybody in here will welcome you with open arms. And I'm saying the other clients are in here, and I'm in here. I'm going to start tomorrow. I start at 6:22 Pacific time. That's when I go live each morning, is 6:22 Pacific time. By the way, I'm not only the co-founder here of TheoTrade, I'm also the lead instructor of TheoTrade. I like doing this. Even if I didn't, have TheoTrade, I still talk about trading all day. I've been trading my entire life. Okay, Monique from Georgia, thank you very much for hopping in here. Ed from Ontario, fantastic. By the way, from Ontario, let me know if it's California or Canada, because there might be differentiation in brokerage firms. Edward from Florida, so feel free, again, keep piling in the questions, because we're here right now, and we're going to answer questions until, again, all right, you guys are out of them. Kay from South Carolina, nice. Okay. Okay, so I love this. Bill chatted in. He's like, I'm having trouble signing up. My kids are on Netflix. Bill, man, we will take care of you. Bill was concerned about, the first 50 we give like a riskless trade to. Bill, I'm saying your name. We got your back, okay? Because I understand. I have 3 young kids, and 3 of them will be on 3 different versions of Netflix simultaneously. Sir, I feel your pain. David said, I don't use Thinkorswim. I use E-Trade, okay, which is Options House. By the way, so one of my really close friends that's a software developer now works for none other than E-Trade. I can show you how to do this on E-Trade. We actually have a relationship with E-Trade. We have a relationship with TD Ameritrade. Those are the 2 big ones that we really work with right now. And you know what? We worked with other brokerage firms, but not every brokerage firm moved to 0 commissions. Okay. Gail from Florida, thank you for enrolling. So, you know what? Dylan asked an awesome question. Is skew already baked into that shaded 1 standard deviation? So the answer, okay. Dylan, I'm going to guess that you were an engineer, sir. Okay. Because I can actually, I can actually, the answer is yes and no on that one. Depends on which equation you want to use. That's kind of my expertise. By the way, Dylan, after enrolling tonight, shoot me an email. Literally say, I talked to Don on the webcast. I want to know about this. I'll give you a chat that'll answer that question in like epic detail because I love talking about that topic. With that, I think we got everybody. Seriously, I think we got everybody and everybody's questions answered. If you still got questions, I'm going to hang on here for a while and I'll type the answer into you. No problem whatsoever. Oh, by the way, somebody was saying, Charles was like, I was promised the expected move. Okay, obviously, if you enroll, you get that indicator, but it's on this page right at the bottom. There's the expected move earnings indicator for Thinkorswim. Listen, I want everybody to leave here with knowledge. I want everybody to leave here with something that's tangible that you can use today. For those of you that enroll, fantastic. We will see you live tomorrow. If you can't make it tomorrow, hey, listen, anytime you want to pop in and say hello, we'll welcome you with open arms here to the TheoTrade family. Thanks, everybody, for joining us here this evening. It's TheoTrade.com/edge. Have a great evening. Bye-bye.